In this video, we'll be taking a look at feature analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. Without further ado, we're starting with the gold chart on the 2 hours time frame. Last week, we discussed about the possibility of price having a bounce from this trend line, right? So we had a good breakout, a small consolidation, possibly what seems like a good retest, followed by a massive bounce to the upside. This is one of our bullish case scenario for last week. We also talked about the possibility of price coming into this area of value, so somewhere around these price levels, where we expected to get the best trade opportunity, in my opinion, right? But notwithstanding, we had that bounce from this trend line, which also presented us with a very good opportunity to go long. So to go long, you'd have waited for the completion of the bounce, then possibly went long around these price levels. Stop loss being placed underneath the retest, obviously, as I explained last week, and this gave rise to approximately 1000 pips, so decent massive profit for those who took this trade opportunity. So today we're talking about the possibility of maybe a reversal or a bullish continuation. As you all know, the reason for this move to the upside was as a result of the escalation of the Israeli and the Iranian war, right? So some missiles were flown into Israel from Iran, and the tension, geopolitical tension of war caused or led to the massive increase in price of gold over the last week. So right now we seem to be trading around an area of resistance, and as usual we'll be waiting for more consolidation. So this is going to be the best course of action, right, to take advantage of the price action of gold right now. It's waiting for a consolidation, right, followed by a bullish breakout to the upside. So this would be your best case scenario for a good trade opportunity, for a better risk to reward ratio. So if this happens, your entry is going to be after the breakout. Stop loss is going to be underneath that consolidation. Take profit target. First one is going to be over here, and next one can be traded as we go higher, because that's probably going to take us into price discovery on gold. This is my bullish case scenario for gold. So the reason why we're waiting for a consolidation is so we can get a better risk to reward ratio, right? So if you're going to jump into a gold trade right now as it is, it means if you go long right now at the current price level, your stop loss would potentially have to be placed maybe underneath these lows, which wouldn't even be safe enough, or possibly around these lows, which will give you a better opportunity to hold your trade for longer without the fear of price gets to your stop loss, which doesn't actually mean price won't get there, right? So there's no guarantees. So that's the reason why we wait for consolidations, and that consolidation would take the form I explained earlier, which will be something like this, followed by a bullish move to the upside. So this is going to give us a confirmation that the bulls are still intact, bulls are still in control of the market, and they are ready to send price higher if we do get this consolidation followed by a bullish breakout. That's it briefly for gold. I don't think I want to say anything more other than the point is to wait for good trade opportunity before you jump in. So another area of value to pay attention to would be this one here. So you can also pay attention to this area of value as a sort of for a sort of retest, right? So while I wait for that consolidation, so we could get price deep into this area of value, get a bounce, then up to the upside, right? So this can also give you a good opportunity to go long, where your entry is going to be after the bounce, stop loss underneath the retest, and you can trade your position to go higher with your first take profit target. Your first take profit target, excuse me, placed around its highs, while the rest of the positions is trailed as we go higher. So that's it briefly for gold. I don't see any reason why you want to short this market right now, especially with the geopolitical tensions. So trade carefully, good risk management, be patient, wait for the best opportunities, then strike. Moving on, we're talking about crude oil. So crude oil, real quick. Last week we talked about the possibility of price continuing to go higher after seeing a good breakout from this area of value, area of resistance. So I think price was around here. Yeah, price was around here when we did our weekly analysis, and we talked about the possibility of a small consolidation before we go higher, with our take profit target around here and another one over here. Honestly, I didn't expect us to move higher this quickly, but once again, this is also as a result of the geopolitical tension between um, Iran and Israel, right? That's the reason why we saw this massive pumps in oil price, because most of the oil supply goes through Iran. Has been distributed all over the world, or other countries all over the world. So that's the reason why we can see a massive spike in the price of crude oil, not since we had this one over here. Right now, the reason I'm doing analysis is not to give you an entry or a possible entry. Your entry would be around here, would have been around here, where you had the opportunity to go long immediately after we took out this area of resistance, as we explained last week, right? Right now, you have to be extremely careful because the market's going to be very volatile for a while, at least till there's a calm in geopolitical tensions. Right now, as it is, there's a good chance we go as high as these highs over here. If tension continues, that will mean getting some sort of consolidation, before we go higher, or not. We may not even get any consolidation. We may just wake up with a big gap on Monday. So that's something to pay attention to. That's the reason why I'll be staying away from the crude oil chart for now. See how things unfolds, get a good trade opportunity, then review the markets to see if we get opportunities to go either long or short. So the best case scenario right now will be waiting for price to come into this area of value. Then we watch out to see how price reacts to this area of value. If we're going to get a reversal to the downside, or we're going to get a breakout to the upside. So this is our next possible area of value, next possible area of focus, if we do get there, right? So there's no guarantees that price gets here, but there's a 60% chance, I think, that we do get there, right? So I'm watching out for this area of value. If price gets here, then it's going to present us with good trade opportunities over the coming weeks or over the coming months. Right now, there's also a gap here. I think price is likely going to attempt to fill up this gap, as gaps do tend to get filled. So I think there's going to be an attempt to fill up this gap, which coincides with an area of resistance, which is going to give us an opportunity to reanalyze the markets to see if the trade is worth taking or the risk is worth taking, right? That's my analysis briefly for crude oil on the 4 hours time frame. Lastly, we're talking about USD-CAD. So USD-CAD setup is more of a long-term setup, in my opinion. This is a 2 days chart. So the reason why I'm using the 2 days chart is so that we can have this entire price levels fit into my chart, because this is our area of focus, right? So if you go all the way back, excuse me. So if you go all the way back, you notice that USD have been ranging within this area of resistance and support for over, is that 10 years now? So all the way back to 2015 to 2025, so 10 years. So imagine price ranging for 10 years within the space. So all you need to do is just trade sideways, trade in between the range, right? So right now we seem to have taken out this important trend line, with price having a steep decline to the downside. So first target would be around this area of support, second one over here if we do get there. So my point is, right now you want to look for opportunities to go short, and I don't mean go short on the 2 days time frame. So the 2 days time frame is meant to show you the overall view of the chart, with price breaking out this trend line. So going on the lower time frame, let's say 4 hours time frame for example, yeah, you want to look for opportunities to go short, aiming for levels like this or levels like this, right? So now to do that, all you need to do is watch out for reversals and consolidation. So I'll be watching out for a retest of the trend line, followed by a good consolidation before a bearish breakout to the downside, right? If this happens, then this will give you, this will give you a pattern like this. So some sort of bearish continuation. Entry is going to be after the break of that pattern. Stop loss above the consolidation, at least the breakouts, so something like this. And your take profit target, first one can be placed around these lows, second one obviously into this area of support. So this is how I'm going to trade USD-CAD. There's no guarantee that we get this sort of consolidation, this perfect consolidation to give you a hint that, oh yeah, watch out, we're going lower, right? But my point is waiting for pullbacks before you go short. And pullbacks for short trade position would only be valid as long as we stay below this trend line. So this blue trend line we talked about on the 2 days time frame, right? As long as we trade below it, if we get consolidations with bearish breakouts, then you go short. right now it's not a time to think about going long, at least not until we get to either this area of value or this large one over here. That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. I know you would love to see more setups on currency pairs, maybe indices. But the reason why I don't, do those analyses is because the charts are messy. I don't see any clear, good trade opportunity right now across major currency pairs like GBUSD, USD-GP, or other USD. That's why I'm staying away from them. USD-CAD, in my opinion, looks cleaner out of them all. That's why I'm doing this review, at least for long-term trade setup, if you can follow the trend. And if these do changes, I'm going to try as much as possible to review as much chart as I can, but always know that I have something good to talk about. Gold, right? Gold is my baby. So that's it from me, guys. If you have questions, leave them in the comment section down below. See you next week.